Intel. The name alone conjures up images of innovation, powering our computing and shaping the tech world for decades. But lately, Intel stock price has been on a life support. Is this a chance to snag a tech titan at a discount, or are we witnessing the slow decline of a giant? Forget everything you know about Intel. Today we are cracking open the company's book, dissecting its recent performance, and uncovering the truth behind its struggles. Is there a hidden gem waiting to be unearthed, or are we staring down a tech graveyard? Buckle up because this Intel deep dive is about to get explosive. Intel was one of the best performing stocks in 2023, but this year they are performing really bad. The stock is down 37% year to date, and that's because in the last two earnings report they are not reporting good results both in revenue and earnings. This is a different type of investment. This is a turnaround stories because Intel was on a slump and now they are trying to recover, but these recovery are not being fast or as fast as expected by shareholders of the company and analysts. So that's why the stock is down a lot. But is this cheap enough? Full disclosure, I did own this company last year. I got really lucky. In 2022 I bought this company two times around $26-27, and after a great 2023 year the stock performed really well, and I thought it was getting a little bit overvalued. And looking at the future risks of this turnaround, I do not believe the risk reward situation was good, so I decided to sell it around $46 or $48. And actually I got really lucky because the stock started a downtrend, and until now the stock is down a lot. So I'm starting to look into it again. I always thought Intel is really cheap, under $30. That is a price I really like to buy, so I'm starting to look into it. I was more bullish on the company, but they are not performing great. Actually, I was expecting a faster recovery, but this is the beginning. Intel is a big company that's been around for a lot of years, and they have good management, and I do really like the company. So let's start digging into it. So Intel, 128 billion dollars. They are trading at the P of 31 but the forward P of 15, but don't look into it. When you look into the latest income statement, they had the peak on revenues of $79 billion in 2021, but in 2022 their revenues came down 20%. 2023 the revenues were down 14%, and they are expecting to start this turnaround point this year. The revenues are expecting to grow 5%, but they are still far away from their peak in 2029. They're expecting to have revenues around $57 billion this year, next year around 63. So investors were expecting a little bit more, but the worst part, they were having net income and free cash flow around $20 billion from 2018 to 2021, which is great. If you look at that peak valuation or that peak net income or peak free cash flow, if they could have a free cash flow of 20 billion right now at 128 billion dollars, it's a P of 6.5 P, which is incredibly low. And especially US are investing a lot in chips. Intel will get a lot of support and good conditions on their loans, for example, and they are investing a lot in manufacturing chips inside US. So I do really believe that's a good story for Intel, but they have to perform it. They have to have high returns on their investments, on these loans, on these new factories and new plants for their chips. So, and for now, they are not having a lot of success, especially in this AI era where NVIDIA, AMD, TSMC, that's a monopoly of manufacturing chip for the big companies, and they want to compete with them, but they are far behind and they have to catch up. So this is an investor that you have to think about the turnaround stories. Their margins were actually pretty good, but now their margins are incredibly low. If you look at net income to revenue, they were being grown, but they are in a slump. They are expecting to return to growth, but their earnings hasn't been great at all. But their return on invested capital has been on a slump because of their earnings, of course. Their shares outstanding were in a trend that was in a decline, but now they have issued some shares, which is bad for shareholders. So everything is looking bad for Intel right now. They don't have the mode that they usually do. The revenue growth, they are starting their turnaround point. I'm expecting them to recover growth. Their margin will recover as well. I'm expecting that. So with this company, we are betting on their future earnings. So the question is, how their future earnings will be in the future. If they are successful in their plants, they could be manufacturing chips for Nvidia, for example. They can recover market share in the GPU, not in the GPU, but in the CPU area from AMD, for example. If they invest in GPUs and they could take a little bit of market share from Nvidia, it will be great for the company. But at the moment, they are underperforming and investing a lot. So this valuation is taking into account future earnings, future growth. So we have to put that on our discount cash flow and look into the valuation of Intel. So it is a great company, a good value brand. I'd really like it, but to buy this company, I want it really cheap. At the previous years, I wanted it under $30. It was a really good price. I bought it at the bottom right here, but right now I'm not as bullish. Intel is not being performing well. I'm not as bullish on their management and in the business for the future. So I don't know, for me to buy this company, I have to buy it really cheap. So for my discounted cash flow, since this is a US company that is low risk, I'm using a discount rate of 11%. For a PE, I do not want to pay a premium from this company. I will use around the mean 16 PE. I'm expecting them to grow around 10% at 6%. That's only because they are in a slump. So in the next few years, we'll see good growth from them. Even with this growth rate, they will take their latest high. Their revenue will hit their top high of 2021 just only in 2027. There are plenty to recover, and with this growth, I'm expecting them to have around 22% margins. Bear in mind, they have around 30% net income margins and free cash flow margins in 2019 and 2020, which is pretty heavy, but I'm trying to be a little bit conservative in my analysis. So this is my base case. I have a bull case and bear case, and with that analysis, I came with an intrinsic value of $33. I'm always trying to be conservative. This is a price that is taking into account some margin of safety, but even with that, I do really like the company, but it's not a company or a business that I'm in love right now. So for me to buy this company, it has to be really cheap. I like it under $30, and we had that opportunity a few days ago, and right now it's trading at $30. So it might be a good price. I do really believe that it will be a lot of support from the US government and into producing chips in US soil. So Intel will benefit from them. They have a good brand, and this might be a really good opportunity. But for me, I would like to see it at a cheaper valuation. But right now, under $30, it looks like an appeal investment for me. But this is my opinion. I have to think about it. It might be a good investment in the future. We don't know, but let's see what will happen. I hope you liked my analysis, guys. I hope you liked this Intel stock analysis. And if you liked, please like and subscribe. See you next time.